Hello, everybody. So, as we are approaching the end of earnings season, I'm updating my spreadsheet every single stock, and today I updated the AI stocks. So, I'm going to go for the top AI stocks. Title of the video is They Can't Dump Forever, because they haven't been doing too well the past 2 weeks. And we're going to go through a valuation of each of these and kind of tell you what I think about them. And going back, of course, to the channel's roots. The channel roots is with two metrics on this channel I focused historically. First of all is enterprise value over gross profit over revenue growth. It's my spin on the PEG ratio. I modified the PEG ratio. Why did I modify the PEG ratio? Because enterprise value is better than market cap. Point number one. And it's obvious. You want to penalize companies that have too much debt, right? That's why if you had like an auto company, for example, like a GM or a Ford, they do very poorly on EV because of how much debt they got. Then I look at gross profit. Why do I look at gross profit and not earnings, right? PEG is price to earnings to growth. Why do I look at gross profit? Because ever since Amazon has been a thing for the past 20 years, we have found out that actually investing in marketing, actually investing in operations, actually investing in R&D is more often than not an investment. So I trust my companies to spend marketing money wisely. I trust my companies to spend R&D wisely, and I look at gross profit as a proxy for economic profit of the company, as a proxy for growth, because when Nvidia invests in the development of a new chip, that money is not lost forever. R&D is not a cost. R&D is an investment, and that's in fact my belief most of the time. Yeah, sure, for Ford, who had to write off $20 billion for F-150 Lightning, yeah, for them, R&D was a cost. But for a lot of elite companies, R&D is not a cost. It is an investment. And so it's wise, I believe, to use gross profit and to not use earnings. And then revenue growth. Why do I use revenue growth? Because there's no such thing as analysts predicting next 12 months gross profit. So I use revenue growth kind of as a proxy for gross profit, because most of the companies I follow are optimized. They're optimized for gross profit. Most of the companies I follow, I expect gross profit to be stable over the long run, and so then revenue growth is kind of a proxy for gross profit growth. It'd be better if I could do gross profit growth, but I can't. And I use the rule of 40. I added that later on the channel. Why do I use the rule of 40? Because venture capitalists use it. It's a proven metric, right? If you ever listen to a Palantir call, for example, they'll keep communicating on the rule of 40. I love when a company communicates on the rule of 40. I love when a company optimizes the rule of 40. And of course, all of these stocks that I cover have a rule of 40 or higher. And, I try to have as high of a number as I possibly can. Of course, why do I talk about AI today? Because AI is probably the biggest revolution of our lifetimes. Probably, right? Probably. I can't think of a bigger revolution at this point. Maybe we will get something, but at this point, I can't really think of a bigger revolution than AI. So let's go. Let's get started. Let's talk about these stocks. First two stocks I want to briefly talk about is Nvidia and AMD. Yes, I realize AMD is number 2. A lot of people want to diversify their suppliers. A lot of people are betting on inference chips. I realize all of the narrative of AMD, and I mostly agree with it. But then when I compare AMD to Nvidia, I'm like, why would I pay double for AMD? Why would I pay double for the number 2 company in the space? It doesn't make any sense to me. When I look at enterprise value over revenue growth, over gross profit over revenue growth, AMD is a 0.82, Nvidia is a 0.44, not to mention my forward revenue growth metric at 69% for Nvidia is heavily sandbagged. They might actually grow more than 100% because Jensen guided $500 billion over the next 5 quarters, and we're 1 quarter in. He guided that at GTC, so it should probably be closer to 100. Also, Nvidia is a Max 7 stock. Also, Nvidia is the cheapest Max 7 stock. Also, Nvidia has so many more inflows from passive indices. So I really don't understand, why AMD over Nvidia. I understand owning both, but I really don't get owning AMD instead of Nvidia. Nvidia is the leader, and Nvidia is much cheaper. I realize there's a lot of bias in the market because it's a $4.3 trillion company, and people think, oh well, it's very tough to grow. But I live in a world where I have no issue thinking that there will be 10 trillion companies in a few years, in a couple years, 3 years, you'll have $10 trillion companies, right? In fact, if you look at Tesla, the goal is for a company to be 8.3 trillion from 1 trillion. So there will be decatrillion companies. So that's even that number doesn't really work to like dissuade me from getting behind Nvidia, and I own Nvidia, of course. I still remember to this day when Apple reached $1 trillion. People thought it was not possible for a company to be worth $1 trillion, right? And then Apple reached 3 trillion. So anyways, I don't understand why one would prefer AMD over Nvidia. I understand why one would want both, but when I look at my metrics, Rule of 40 is way lower, and EV over GP over RG is way higher for AMD. So AMD is number 2. I prefer to invest in number 1s, especially when they are cheaper than number 2s. Let's talk about SMCI. SMCI is the liquid cooling pure play. And SMCI has one big competitor called Dell. And of course they are liquid cooling, but not at the individual component level. SuperMicro, they do liquid cooling at the rack level, so they sell racks. They're a big seller of legacy racks, like fan cooled racks, and much of their growth is coming from liquid cooled racks. And actually, if you look at the CEO of SuperMicro, quirky guy. He talks about green computing. He's in the forest. He's telling you about how he's saving the planet with his green computers. And by green computers, he means computers that doesn't use a lot of electricity. So SuperMicro is the pure play. Dell is a big company with a lot of businesses, including a cooling division. So I prefer exposure in the cool play. I own SMCI. I think SMCI is dirt cheap right now. They have a Rule of 40 at 48. EV over GP over RG is a 0.22. Liquid cooling is the future. It is not going anywhere. The new chips, the Blackwell chips, need liquid cooled. All of the Nvidia roadmap calls for liquid cooled. So for me, SuperMicro will have a bunch of cells, and yes, they've kept delaying the cells, but the market functions quarter to quarter. I don't function quarter to quarter. I look at the very least a year out, and when I look at the performance of the stock, this SuperMicro stock actually has traded like hymns. Big spikes, big time down, big spikes, big time down, big spikes, big time down. So that could be an options trader dream, this stock. It has traded just like hymns, up, down, within the whims of the market. Right now, we are in the lower range. I wouldn't be surprised if the stock got back to the 50s and the 60s in the next wave of hype. And at a 0.22, I find it way too cheap. And I like SuperMicro at this level. Let's talk about Micron. So Micron is kind of the same story as AMD, except it's cheaper than AMD, of course, and it has a better Rule of 40, of course. So I guess it's not the same story as AMD, but it's so specific. Memory chips. Do I really want to invest in memory chips? It's so specific for a company that is the same price as Nvidia, but that has a lower Rule of 40 and that has a much more specific segment. I'm not so sure I'm in love with it. In addition, if you look at how much it grew, plus 100%, I feel like I would be chasing at these levels because it's already up 100%. Because, of course, if you follow AI, everybody's talking about us running out of memory chips right now. Like, memory chips are very important. They haven't grown as fast. That's what everybody's talking about. So the stock is up too much. I still prefer Nvidia when I compare it. Plus, Micron has a long history of being a highly cyclical stock, up, down. A lot of these semiconductor stocks also have a history of cyclicality, but Micron has an even bigger history of cyclicality. Also, a lot of people have complained about Micron's performance over the long run, even though right now it seems like it's doing okay. But to me, like I said, I prefer Nvidia. If I'm going to see Nvidia, I'm going to prefer Nvidia. Okay, moving on to the next one, Taiwan Semiconductors. Okay, I will give them a kudos to Taiwan Semi, actually, because, of course, if you pick NVIDIA over AMD, you kind of have to make the bet that NVIDIA wins. If you pick AMD over NVIDIA, you have to make the bet that NVIDIA wins. No, I was gonna make a joke. I was gonna say you could add Intel in there, but no, it was a joke. So, anyways, because Intel is not gonna win. But anyways, the point is TSMC. TSMC, you don't have to pick who wins. You don't have to pick who wins with TSMC. They manufacture all. They manufacture for all. They have Samsung, a little bit of a competitor in Samsung, but I think Samsung is very small market share or something like that. And Texas Instruments, of course, is like bigger chips. They don't make the small chips at Texas Instruments. So Texas Instruments is not a competitor. They're pretty much a monopoly as far as foundries goes. They're a monopoly foundry. So whoever wins, TSMC is gonna win. And in the past, I have dismissed TSMC because the growth rate was too small, but I'm pleased to say that when I update my spreadsheet, I see analysts have it growing at 29% next 12 months. 29% growth, which is very close to my minimum of 30%. So I find this company inexpensive. The delta right now between Nvidia and TSMC, I still prefer Nvidia right now. But if TSMC were to get cheaper, like if it were to get in the 0.2s, I would be very interested in TSMC. Right now, I think relative to Nvidia, I think TSMC is still a little tad expensive, I think. But anyways, it's all a matter of relativeness, right? It's all relative. Okay, Nebius, it's a channel favorite. Nebius is my absolute favorite out of all of these, but it's a different risk profile, of course. Nebius is a small cap. It's gonna bounce up, bounce down, bounce up, bounce down. You know I like smaller caps on this channel. I like high growth. So Nebius is right up my alley. Nebius is gonna anywhere to 10x and 20x their revenue. Analysts have it at 1600%, but they guide 7 to 9 billion, so let's call it 8 billion ARR in 2026, so and 8 billion in annual recurring revenue in 2026, and right now trailing 12-month revenue is 500 million. So we don't really know where it's gonna land, but it's gonna be at the very least a 10x. And of course, my spreadsheet favors company who 10x their revenue. Because they are going to 10x their revenue, they look dirt cheap on my spreadsheet at a 0.04. I'm paying next to nothing for each percentage point of growth at Nebius. So it's much cheaper than Nvidia, about 10 times cheaper than Nvidia on a growth adjusted basis, 20 times cheaper than AMD on a growth adjusted basis, and 4 times cheaper than SMCI. Of course, it's also perhaps not an entirely fair comparison because it's a very different business model. I guess all of these are makers, right? Whether it's TSMC or Micron or SMCI or AMD or Nvidia, they make stuff, right? Physical, well, technically Nvidia uses a foundry, but they make the intellectual property behind. Nebius doesn't really make. I mean, they make big servers, they make big server machines, but Nebius more operates. It's more of an operator of chips. So not exactly a fair comparison. But still dirt cheap. And if you actually were to be fair to Nebius and remove the value of AV Ride and the value of ClickHouse from their market cap, it would look even cheaper. So I love Nebius very, very much. Nebius is down today. I can't believe it. It was $78 earlier this morning. I can't believe it. It's ridiculous. And lastly, let's finish with a stock that is down roughly 80% from its peaks in July. And I remember in July, a few people came up to me and say, hey, what do you think of TSSI? They were talking about it in the comment section. And I'm like, well, I think like I missed it. I feel like it ran too much. I missed it. That's what I think about TSSI. Well, there you go. It did a 5x in no time, and it was just halved by 5x in also next to no time. In 5 months, it lost 80% of its value. And I think the question is it interesting right now? Well, it's a risky play, but I mean, I find it fairly interesting, right? Of course, it's trading at 0.04. They are how could I describe them? They're kind of an aggregator, kind of a supplier. They're a supplier. They're a reselling business. They procure the goods. They're a procurement business, and they have one big customer in Dell, and so that's risky because if Dell, directs the business elsewhere, they could lose a lot of business, and they also have high capex They moved their factory in the Austin area to like a bigger spot, and they're investing heavily. And of course, you know how Wall Street feels about CapEx. Wall Street hates CapEx for a reason or another. Part of the reason why Nebius is down too is because Wall Street doesn't like CapEx. But at this price, it's dirt cheap at a 0.04 for a company that I'm seeing is only going, only, quote unquote only, but it's going to go at 150%. They could grow higher than that. If they grow higher than that, that one could be very interesting. TSSI would warrant a full analysis at these levels, in my view. I just need to have more time to do this. But anyways, this is the state of kind of AI valuations. So you kind of know how I feel. Nvidia to me is better than tons of choices in there, and then I like SMCI and Nebius for the more growthy, the more risk-oriented investor, which I totally am. I'm definitely a risk-oriented investor. Nvidia at these levels, I don't consider risky at all at these levels, but that's just me. Anyways, this was not investment advice, not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.